Hey guys, welcome back to another episode. Today we're going to take a closer look at Nvidia. The company just reported earnings. We're just going to do a nice top level overview of their earnings report. Make sure to stay tuned. I will be doing a live stream of their earnings call in the next few minutes after I post this video. But right now we can see the stock is pretty much flat after hours. We do have numbers already, and we can see revenue was 22.1 billion versus 20.5 billion expected. Earnings per share also did beat $5.16 versus $4.64, and guidance was a whopping $24 billion. I think analysts were expecting closer to 22 billion. I forget the actual number here, but it is a beat all around in revenue, in earnings per share, and guidance. So why is the stock not up? Well, obviously a lot of investors are curious about what maybe not guidance for quarter one of this year, but also guidance for the upcoming full year. Are we going to see some slowdown? What's happening in this AI space? But if we take a closer look right off the bat, data center market was up a nice sequential growth, and this is pretty much the bread and butter of Nvidia right now. So for this one to be up sequentially, that's exactly what you wanted to see. We can see gaming is pretty much flat. I'm actually surprised about this, right? I would have expected this to have grown a little bit more just due to maybe AI compute solutions being needed in workstations and laptops, but we're going to have to see guidance on this. We can see professional visualization is kind of seeing kind of maybe that traction from AI workloads from workstations. That was up sequentially. Automobile market was also up sequentially, but it's still down year over year, probably due to that kind of China pressure. So now if we take a closer look at commentary right off the bat, we can kind of look at non-GAAP gross margins, 76.7. And this is something to kind of keep in mind of, right? Where normally NVIDIA's gross margins are in the low 70s. Obviously, in quarter four, we kind of had some weakness due to over inventory correction last year. So it is a nice year over year growth, and it is a small sequential growth. And right now, Nvidia definitely has that pricing power from their H100 for the overall demand that they're able to put on that solution because to the date, even though the MI300 is out, there's no real true competition in this space. So gross margins tend to be high. One of the tailwinds in the future that many people are kind of thinking about is gross margins might see a decline. While I do believe that's the case, I do believe gross margins will still be able to be either in the high 60s or low 70s. In forms of revenue, we can see data center is up 409% year over year due to the overall growth here in the data center and AI space. Obviously, we can talk about all the good things here. The data center market is growing thanks to AI, but we do see that data center sales to China declined significantly in the fourth quarter due to United States government licensing requirements. And this is something that we're going to have to listen during their earnings call. We already knew that it was going to decline by a huge amount based on their guidance last quarter. Now, what we need to see or hear from earnings call is, hey, is there a fix to this problem right now, or is it pretty much game over for at least the next few quarters in China? We have heard that Nvidia has kind of created some chips working with kind of the United States regulator as well to make sure this kind of exports don't happen again, restrictions don't happen again. So I do believe this is going to be some nice tone that we might hear either this earnings call or next earnings call. Now, if we take a closer look at their balance sheet, this is insane. Cash and cash equivalents of roughly 26 billion, up from 13.3 billion a year ago and up from 18.3 billion a quarter ago. This is crazy how much money this company is collecting from its cash flow. And I do believe this is something that if we do see kind of a decline in the AI space or some form of decline in this overall market, this company is building up its cash to be able to kind of either make acquisitions, smart acquisitions, make great investments. So right now, I do believe the company is doing pretty well by increasing that cash at the moment. Now, purchase commitments and obligations for inventory and manufacturing capacity were 16.1 billion, down sequentially due to shortening lead times for certain components. Prepaid supply agreements were $5 billion. So one great thing here is we have heard that NVIDIA's supply issues are getting better. And right off the bat, we do see that that's the case, and they're not really talking about any weakness in demand. The only reason that they're seeing a weakness, a decrease in manufacturing capacity, expenses, and purchase commitments is just to better lead times. And I do believe that's why the company was able to beat in revenue and also beat in guidance. So I just wanted to do a quick overview on earnings. We can see the stock is up over 6% now as I'm about to finish today's episode. I'm going to just do a quick edit, post this on my channel. But if you guys want to learn more, make sure to join the live stream that will be on in about 20 minutes or around 4:45. So stay tuned and see you guys in a bit.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.